Welcome to TheoTRADE. This is Don Kaufman. September 13th, 2023. Just about 35 minutes to go to the cash close here with a marketplace that's, well, massively unchanged. You know it. You love it. Well, inflation, it's back. It's back. But what we're dealing with right now, right in front of us, is navigating through what has become a bit of a stalled marketplace. That and much more here on this evening's video. As I was saying moments ago, the S&Ps, they're stalled out right now, and they're down a massive two handles. Look, the entire trading session today, we have been higher, but realistically speaking, it's just been kind of a grind. There's been just no volume. You know, the S&Ps are in the midst of a roll, but we have to be a little bit concerned about what is right out in front of us. So I know everybody looks at this and they're like, there's not a lot of trade action over here. Look, it's a slop fest. There's bifurcations everywhere. And when I'm talking about a slop fest or bifurcations, I mean, look, the financials, they're down, listlessly so. The energy sector, which was up pretty good at the cash open, seeing a little bit of sell side activity, but the big bifurcation continues to be inside of tech. Like right now, it doesn't even matter what the financials are doing. It doesn't even matter what the energy sector is doing. It all comes down to the fact that, hey, look, Apple was off a little bit today, and that really cools most of the NASDAQ. Meanwhile, if you take a look at Tesla had a wild bid right out of the gate. That thing kind of faded a little bit. NVIDIA, decent bid, but faded here in like the last, few hours of trade. There's not a great feel right now for markets. I don't mind saying that on an intraday basis. That's why I'm kind of saying it's stagnating a little bit. And in the midst of this, and you look at a marketplace that's stagnating, you're like, I don't know if I want to engage into it. But the truth be told, this is a wonderful time to actually sell options premium. Like I'm literally sitting here. If you look at the S&Ps, I'm just a few S&P handles away from covering another position. So I'll take it, a little bit of a volatility crush inside of this marketplace. As I said, I'll take it. But let me actually break down what I believe we're going to see in just the next 2 days. So I am going to start this evening's video here in the SPX. And the reason I'm starting it in the SPX, look, okay, what have we done thus far on the week? So Monday, nice bid. Faded a bit on Tuesday. Okay, right now, maybe a little bit of a fade, but here, look, the bottom line is what you're looking at right in the center of your screen here. That line, that is actually where the week started. You know where we are right now? We're exactly where the week started. But with all due respect, that leaves us a huge amount of movement, okay, capacity in the next 2 days. Why? There's almost a $60 expected move. Actual move right now is basically nothing. So you have, the ability and a high probability, if you will, to move up $60 or down $60. And that basically, again, is the expected move for the week. So one of the things that I continually like to mention week to week, kind of day to day here at TheoTRADE is, if you look at the statistics, okay, of hitting the upper end or lower edge of an expected move on any given week, it's extremely high. And it's just something that you have to keep in the back of your mind is that the marketplace, okay, is often drawn higher or drawn lower, okay, because there is so much volume, so much liquidity at the edges of the expected move. And this week, we also have 2 expirations on Friday, which I think, if you will, furthers the notion in terms of volume, in terms of liquidity, okay, of how much skin is in the game on the edge of those expected move is nothing less than phenomenal. Now, if you looked at, this from, I guess, the statistics point of view, when you look at that expected move in the previous, screen, and it was like, all right, supposed to move up $60 or down $60, okay, you would say you're supposed to stay in that range 68% of the time, which is 1 standard deviation. But the statistics point of view, okay, doesn't really embody what goes on in the marketplace, because in the marketplace itself, we are literally drawn to the edges of this expected move, which is, again, a vast departure from the definition, okay, of, if you will, standard deviation. So in any given week, you just look back through a couple of weeks over here, especially recent weeks, like how often, look, cracked the expected move, cracked the expected move, cracked it, hit the expected move, cracked the expected move, cracked it here, okay, here. All right. Oh, look, we have a week here. That one's inside. So we have 1 week so far. Cracked the expected move, cracked it, cracked it, cracked it. This week we're inside. So in recent weeks, basically like one recent week that we didn't tag the upper end or lower edge of an expected move. And I want to make that point. Now there's periods of time where, yeah, you'll see, oh, here's a week where you didn't crack it. But again, from a probability point of view, you got to anticipate that we're going to be rocking a little bit into Thursday or Friday. And on that note, when I'm saying we're rocking a little bit into Thursday or Friday, on that note, take a look at the calendar. There's no shortage of data coming out. And I keep talking about how data points are not all that critical. They're not all that critical in respect to the fact that I know that everybody is like, there was a CPI report. Yeah, good. Inflation's back. Of course, nobody looks at it that way because the CPI report, generally speaking, it came out as expected. But the expected number shows an increase. Everybody forgot about that. Neither here nor there. But, okay, right now you just got to realize that it's not about what the number is. It's about lighting that fuse. You got ECB tomorrow. You got jobless claims. You got PPI. You got retail sales. There's no shortage, okay, of little chocolate-covered hand grenades being thrown into the marketplace specifically tomorrow. And again, the reason I'm bringing this up is if you think you have a good feel for this marketplace, that's just not plausible when there's bifurcations in tech. Like, it's just not plausible. You got energy down, as I was showing you. You got financials flat, okay? The advanced decline line out there, it's completely sloptastic, okay? What you need in this marketplace, and you got to be careful for, is volatility shocks. And one of the things you got to recognize is right now we're sitting in a volatility that's dead. Like the VIX is dead. I don't think the VIX is actually a great justification for some of the volatility in this marketplace, but VIX is dead. Volatility futures, they've come off substantially. They're dead. Okay. And I want to be just crystal clear about this. Even the slightest inclination of a down move in this marketplace is going to bring volatility back to life. Okay. Why? Because volatility is lying dead on the basement floor. And even the slightest inkling of sell-side activity, as you can see, like even look at the VIX today, right? There was a little sell-side activity, hit the tape earlier, pop, right back to the upside. You're like, wow, he's got a point over there. It is a big move. It should be like that because you're lying dead on the basement floor. Like VIX is not going much below where it was earlier today, which is the lower edge of the 13 handle. So with that being stated, okay, it's going to be, and again, the volatility futures and VIX are actually going to be a decent indication, if you will, in the days to come. On top of that, okay, the bond market has completely stagnated, right? Sell side activity in the bonds, I would assume, is going to once again kind of rock that marketplace, and it's quieted down. This, people, is not what I would have expected on a CPI report. Okay. Meanwhile, dollar looks like it's actually forming a little bit of a again, a base here to possibly break out to the upside from. That's going to be another wonderful indication. Look, all of this in summation comes down to the fact that you kind of wait out a little bit of this period of stagnation. How do you wait it out? Right? You sell some premium, okay? You wait to buy it back. Look, I'm working an order here. If we actually trade down just about 10 handles from where we presently are, I'm going to fill another trade for a 50% gain. That's what you want to do when markets are stagnating, okay? Meanwhile, I would look, for, again, some much more significant moves coming into Thursday or Friday. Push aside, by the way, the notion of triple witching, which will be, this Friday. again, push it aside. Yeah, there's a lot of options coming off over there. It's a few $1 trillion of options that are going to be coming off the books on Friday morning and afternoon. Okay, and again, that can spark degrees of volatility, but push it aside. Everybody right now is data centric. People, that is what matters in this marketplace. As data comes out, lights that fuse. We need to get out, okay, of the range. Look, we're in well-charted territory. In fact, to come in here, go to futures, right? Last look over here, contract just, hit apply, hit OK. We're in really well-charted territory. Like meaning that you should see a low VIX. Like how many times have we been right here? 45.14. I mean, I can actually pull this thing back to 180-day 4-hour, and you'll see there's a pivotal area. 45.11. How many times have we seen that? Again and again. I'm going back, to what? The beginning of summer. All right. And we've just we're right in the middle. We're literally right in the middle of that range that we've been in. So expect volatility to die down a little bit. But again, that volatility is going to come raging back if there's any push to the downside in this marketplace. Thanks everybody for joining us here at TheoTRADE. Have a wonderful evening. Bye-bye.